Hey everyone, welcome to the newsletter for March 28th. So we'll start with our quick overview of the dashboard in Glassnode, and then what I want to do is actually take you through a handful of different metrics, which I've just been looking at, just trying to get a bit of a feel for two different classes of people. First of all, who are the new entrants that are coming into the market and what's their general standing in the whole mix? What are the long-term holders doing? So we're always looking to see what the long-term holders are doing because really they're the ones that hold the long supply. But simultaneously, if we're going to talk about this whole concept of a super cycle, in reality, we need to be considering, are we getting new hodlers coming on board within this bull market that are long-term thinkers? So what I really want to do is break down almost within those three categories who those different people we're looking at. We've got long-term holders, which we're looking at lifespan, coin days destroyed. We want lifespan being destroyed in those metrics. We're looking at short-term holders, so we can actually Glassnode, and once you get tier 3, you can actually break down and isolate those short-term holders, things like SOPR and ratios like that. But there's an in-between, there's a new class of people who are essentially accumulating between, let's say this bull market started in, somewhere around October when we got above about $10,000. That's probably where people started to go, hang on a second, this thing's really starting to move. So I want to explore that concept in particular. Who is this new class of hodlers and are they coming on board? So we might actually leave these top two charts. In general, they're telling us the same story. We went through these last week. In terms of the supply profit ratio, it's basically saying that we're somewhere similar to what the reserve risk would say. Reserve risk, or the R hodl ratio, which is almost at that second consolidation before the final leg up. So it was somewhere around $3,000 in 2017, and obviously we went from 3,000 to 20,000. So quite a significant move from that point onwards, but it was far more vertical. It was basically an uninterrupted move straight up. Now, what is very interesting is, we've basically got our spread of time-based metrics here. We've got ASOL, which is per transaction, dormancy, which is the amount of destroyed coin days per coin, per unit BTC. We've got coin days destroyed, which is our total units of coin days destroyed, and then our binary coin days destroyed. Now, what's important here, actually, I'm just going to stop, hang on, I've broken that. So what's important with all of these metrics is essentially the fact that they're trending down. So I'm just going to whack on here for our, this is my new favorite setting for binary coin days destroyed, setting it to the 1 hourly and then putting a 7-day moving average on. So all of these have a 7-day moving average because otherwise you get too much noise day to day. But you can see that all of these have the same pattern of basically trending down. Let's put this to 1 year. Basically trending down, particularly since that 42,000 peak, everything is just peaking down. So, we've covered this in a number of different instances. When we then look at our binary coin days destroyed, you can actually see, so let me go back to 1 year. You can see that through this early phase, basically up to 42,000, we had an uptrend in the overall coin days destroyed being above average. And since that point, here's where I'm starting to talk about, and this is what set me off thinking about this new class of hodlers. We peaked at that point, and it's been call this a bullish divergence, right? This is essentially a bullish divergence because we have price going higher and fewer coin days being destroyed. Less distribution, more price. That is a bullish divergence in my opinion, but within an on-chain metric. And this is what set me off thinking, okay, so if we're going to look at this thing here, clearly something happened somewhere around October. So right now we're at the 28th of March. Let's look at the 28th of October. And you can basically see that's when things really started to pick up. And it's when we were at 13,000. So really that's when we started coming up against the plus token high that we had back in 2019. So that 14,000 peak, it makes sense for some of the long-term holders to start spending at that point. So basically from that 14,000 peak, roughly 6 months ago. So that's kind of our timeline. The first 3 months of that rally went from 13,000 to 42,000. And then in January, or let's say December 28th, so that's basically 3 months ago, we basically peaked and then we've had a downtrend or a bullish divergence. So we've had distribution for 3 months, followed by 3 months of essentially reduced distribution. And we can see this in all of our time-based metrics. So it's telling us that we have a coherent story going on here. We did get distribution. Now we've actually got some kind of accumulation going on. So let's keep that concept in mind, that accumulation within particularly the last 3 months, it's going to be a theme that I really want to explore in the charts for this particular session. So let's look again at our 1 year on our SOPR. Oh, and I need to run through the long-term SOPR. I finally worked out what's going on with that. We'll have a look at that in a second. In fact, let me boot this up just so I don't forget. So with our SOPR, so on an entity adjusted basis, you can see we've basically come down and retouched the same level that we did for all of our consolidations. So you could argue that we've reset on the entity adjusted SOPR, but you can also see that we've got support coming in sooner than a full flush, right? Now, if we look at the short-term SOPR, so this is only coins that are 155 days old or younger, you can see that we got a full retest and then a bounce. Now, what that's saying is that some profits are now being taken on this leg up. It is therefore possible that some of these short-term holders are basically cashing in their chips. Maybe we get another low, maybe we pull back and we get another higher low, because short-term holders are basically saying, whoop, maybe this is too much, right? So they're starting to take a little bit of profit, even though they basically flushed down and fully reset. Maybe we get another small pullback and a lower high and then a rally higher. Just to flush them out one more step. But overall, we've essentially got our SOPR reset. So it really wouldn't bother me if we actually rallied from here, is what this is telling me. We've essentially reset that. I wouldn't mind to see a bit of a full flush and actually getting short-term holders on the wrong side of the boat. That'd be positive, but again, we'll take what we get. Now, just before I forget, let's look at the SOPR. So I know that I've mentioned long-term holder SOPR a number of times and never quite fully understood what it meant. I now have kind of contemplated and understood what's going on here. You can see how cyclical this thing is. You could almost argue this looks very much like the reserve risk or the R-HODL ratio, and that's because that's essentially what it's telling us. The reason that the long-term holder SOPR, remember the SOPR is spent output profit ratio, how much profit was spent on any particular day. Now, if our level is 1, it basically means that long-term holders are spending at their cost basis. If it's below 1, then it's going to be at a loss. If it's above 1, it's going to be at a profit. Now, the reason that this thing basically just cycles, and you can see that it's under 1 during the bottom of the bear, cycles up to a high, cycles back down to a low at the bottom of the bear, so on and so forth. It's literally because long-term holders are over 155 days. If you hold Bitcoin for 155 days, the odds that you're going to be in profit is pretty high, right? So it actually doesn't matter when you spend it. There's a pretty good probability that you're going to be in profit, unless you're buying at the top of the bull and then selling at the capitulation point. So the reason that this long-term holder SOPR basically just fluctuates with price is literally because once you get past that 155-day threshold, you're pretty much mapping one-to-one with price, right? So that's essentially what this is telling us. It took me a little while to get my head around that, but fairly simple now you think about it. But what is kind of an interesting observation is how this dips below the full sell-off level or into losses before we get under the realized price. So for those of you who remember, the realized price basically put the floor in this bear, and then basically was all of this was trading underneath through to April, and that's when we broke above. Likewise back here, you can see that we dipped below this somewhere about maybe halfway through maybe the first third through the bear if we include the capitulation as the last third. So the long-term holder SOPR could very well be like almost a leading indicator that we're heading into some darker times. So maybe this is something that will actually provide us some edge as we move into the later stage. If we do get a bear market, this could very well give us a bit more insight into what's going on, because it's basically telling us what happened to the people who bought higher than that previous point that are long-term holders. So people who bought the top, held for the 155 days, became bag holders, and then start selling. That's what that's really telling us. So we will probably come back to this, but I suspect we'll come back near the top and we'll come back near the very bottom. So it's a very cyclical long-term mapping. Now, this is an interesting one. If we're looking at entities net growth, so this is basically an entity would be if I withdrew coins to a new wallet, new entity. If I sent coins to Coinbase, that would be classed as Coinbase's entity and would not count as a new entity. They recognize that it is Coinbase or it is Bitstamp or whatever. Some individual or a miner, for example, if they know that that miner is moving coins to their own wallet, it will be one entity. So really this net entities is growth in new wallets that are at least, at the very least, not someone that we've already classified, if that makes sense. Once you combine a UTXO, you'll get removed and be considered a single entity, that kind of stuff. Now, the actual count of these wallets, again, we're talking about this, have we got new hodlers coming in? We've got an explosion through particularly, this is obviously break all-time high, makes sense. Out of that 29,000 level, explosion, and then again from the bottom of this correction, explosion in new entities. The number of, so this is the net growth or rate of change. So we've got an explosion in the rate of change, and the actual number of them, you can see is, it's almost consolidating, but we have new entities coming in, right, on board. So it's telling us that we still have new interest coming in, and it is following price, but it's actually buying dips. Now, some of this is going to be literal dip buyers, right? It's going to be people who understand that it's worth stacking sats because conviction is higher. It's going to include all the Bitcoiners who are just going to stack religiously. It's going to include new people who understand. It's also going to include new people who don't get it and will probably flash sell but are small. And it's going to include institutions and custodians and the like. So, overall, human beings withdrawing coins and actually, individuals being out there in the wild who are actually participating in the network. This is a tradable chart. It's a good looking chart. It looks like it wants to break higher. The rate of change is breaking higher. Overall, this is pretty good. I'm pretty pleased to see this. Miners, I think we've covered in infinitum. They're basically gone back to neutral, so not much happening on the miner front. And we will look at exchanges and the liquid supply in a little bit more detail right now. So we were talking about this potential new class of hodler who's coming in. And we mentioned that from 6 months ago, somewhere in October, we basically had distribution through to the end of the year, through to late December to January. Then we've had a period of reaccumulation, and that's essentially been since the 42,000 level. Now, what we've got plotted up here, let me just pull up my notes just to make sure I get this right. So we've got our 1 to 3 month old Bitcoin in orange, and we've got our 3 to 6 month coins. This is basically the movement of coins. Think about your hodl waves. You're going to have coins that go from 1 week to 1 month. When they pass that 1 month level, they will start showing up in this orange curve. When they then pass from the 3 month level into the 3 point something level, right, they will move from the orange curve into the blue curve. Now, remember, any change that's going on in this orange curve will have started 3 months prior. Now, if we map you can see that the orange curve, which is 1 to 3 months, is in a fairly significant uptrend. You can see that these people sell off a little bit during these dips, but then it basically keeps stacking up. And again, remember, spending will be instantaneous, so dips will be immediate, but the increases is actually offset by 1 month because those coins had to be bought a month ago and are now maturing. So uptrends take a little bit of time to kick in, the lowest boundary. Spending is immediate. So what we've got here, let's map onto here, November 20th is when we really started to increase. Again, you could almost argue this is kind of oscillatory here, so maybe we bring it to December. So that's 7 months ago, right? November 28th would be 7 months. So 3 months later, 1 month later, because it's the lower bound here, we're then talking about somewhere around, where are we, December 28th? Yep. So you can actually see that from that point, here's our accumulation. So the accumulation that occurred back here at all-time high, 18,000, 19,000, up to 9th of December, for example. Where's 9th of January? Oh, look at that. 9th of January is pretty much the bottom of this. So the accumulation that occurred here starts accumulating there. That's where we're seeing it show up, right? We then start to see this second phase of leg up at February 28th. So that means that January 28th is when we're getting the accumulation. Accumulation in this particular drawdown, there it is, starting to show up here, right? So that's kind of what we're starting to see. We're seeing this reaccumulation that's going on, particularly from that 28,000 level and then all the way up is basically what we're seeing through here. We get some profit taking, but then the reaccumulation that occurred here starts showing up. Yep. Now, our uptrend here, we're talking about in our 3 to 6 month realm. So this one here has started in March 11th, March 12th. So if we want to unwind the lowest bound, which is 3 months, that's basically going to be, what is that? March, February, January, December. So we're talking about somewhere in the 12th of December, which is 12th of December. Here we are, right? This all-time high accumulation is showing up here and starting to trend up higher. So the coins that were accumulated here really have not moved. Now, just to put some numbers onto this orange curve, over the last 3 months, which is from this point here, where are we? December 28th. So from this point here, we are talking about 830,000 BTC have moved from very young to 1 month to 3 months, right? Somewhere in that 1 to 3 month realm. That's the difference between this node here and where we are at the moment. It's 830,000 BTC. That is not insignificant. Now, what we're seeing is that exact same offset, the offset that created this, is creating this, which means that 830 BTC could very well accumulate into a 3 to 6 month. This is this new class of hodler. And if we map this point here, so from 6 months, which is back here somewhere. So this plateau, for example, from this plateau to this node here is 395,000 BTC. So between the two of them, when we're talking about 1.15 million Bitcoin that have been accumulated somewhere around this zone. I mean, it is truly extraordinary. So basically in this first leg, we had almost 1.2 million BTC accumulated. This is a new class of hodler. That's a huge amount of coins, right? That is a huge amount. And I think on the Bitcoin Treasury site, 1.37 million BTC, so almost the same amount. Very well could be the same amount, right? So a lot of coin has been accumulated and is in cold storage. I would strongly suspect that this is going to continue to age over time. So this is something to actually, it's something to be pretty keen about, because it's telling us that supply sink remains. Here's our hodl waves. So I've turned on 1 to 3 month, 3 to 6 month, just to really put this into perspective, right? We're talking about these are 10% bars. You can see that this down here, we're basically rallying up. So this is that exact same trend. Let's zoom into 2 years. So what we're basically seeing here is that overall, the change that we've seen since, what did we say, October or September 28th? No, October 28th. So from this node here, right, just in around this 14,000, 13,000 type level, from this node here up to where we are here, we're talking about something like 9% of total supply has been accumulated in this leg. And you can see it, right? This is the 3 to 6, basically 1 to 6 month old coins. They are being hodled and they are increasing in volume. So overall, it's a pretty positive trend. It's saying that coins are actually getting older rather than younger. And you can see that this plateau that we've got going on here looks very much like this plateau here, right? Literally, look at this. Look at the pattern. We've got the dip, we've got the rally up, we've got the dip, the rally. We've got the dip, the rally up, the dip, and there's the rally, right? Occurring in the older age bracket. So we have the very same pattern showing up in price that we're seeing in our hodl waves. This is super, super bullish, right? It is showing us that the coins that were accumulated here are getting dumped into cold storage. Now, what I might do actually, I'm just going to zoom in on my notes here. I'm going to bring these across. So this is what I'm mapping out. I've just been looking at what I'm going to publish for a week on chain next week or tomorrow. Now, what this illiquid supply chain chart is showing us is over a 30-day period. So basically every green candle that you see here is looking back 30 days and saying how many coins have gone from liquid to illiquid versus the previous 30 days. And here's our 6 month age brackets that we've been talking about. So here's our bands that are currently 1 to 3 months old. Here's ours that are 3 to 6 months old. And again, the coins that are accumulated here, right, are going to be represented further in the future as an aging. They'll go to 1 month. So the coins that are accumulated here will become 1 month here. Then they'll become 2 month here, 3 month here, and they move into the next bracket, right? That's what this is telling us. So you can see that here is that first batch of accumulation that was occurring. So this is accumulation that's occurring back here, right? Because all of these are offset by 30 days, right? So something that occurs at this edge of the box is relative to what happened back here. So track everything back by 1 month. We can see the accumulation that occurred in this bracket here here it is, right? 1 month later, you can see that starting in this block, here's the accumulation that's occurred. There's our dip. There's our rally up higher. This is the accumulation that occurred in 18 to 20,000. This is the accumulation that occurred on the rally up to 42,000. You can see that it really dipped down. This is the accumulation that occurred following the 29,000 and the Elon candle. Yep. So that's really what's going on. It's telling us that 30-day look back. And you can see that on that 30-day look back, basically at this dip here, massive, massive accumulation. So this is connecting this dip to this rally. So we do have a huge amount of accumulation going on, even up here at $50,000. I find it very, very hard to be a bear right now. I'm just seeing way too many things that are telling us that we have legitimate accumulation going on. And, you know, you have to go to this level of relatively advanced time-based analysis to understand when something happened to when is it showing up on actual, you know, on our actual supply curves and things. If we look at our entity-adjusted liveliness, so this is telling us a little bit about the accumulation. So accumulation is in a downtrend. In fact, maybe I'll just bring my notes back for this guy. We have an accumulation in the downtrend, right? So that the 11.5K level is kind of where things start to change. Uptrend is when distribution is occurring. Old coins are moving, bringing the liveliness of the chain up. As it starts to slow down, we get this following that 42,000 peak. So we know we got that high amount of sales during the rally up. We've had a gentle cool off of that. Now we're going sideways, more or less. We've got these two little plateaus. That's hodling behavior. So during this particular dip, the overall distribution of long-term holders has significantly slowed. So again, the liveliness is really telling us a positive story at the same time. So we've got our accumulation, we've got some distribution going up into 42, starting to slow down as we move up to 50, 58, I think this was. And then it's basically we're moving back into hodling accumulation territory. So this is hodling that we will see in a month's time, 3 months' time. So we haven't actually seen this show up, but this is our first sign that maybe there's more actually going on. We looked at this, we looked at this. We looked at this. So just to kind of finish off, so overall, what I'm really seeing at the moment is extraordinary amounts of accumulation that have definitely occurred in the past. I would almost characterize this as normalizing buying the top, and it's normalizing buying the top by both institutions and retail, as we saw with the explosive growth of new entities, as well as just the sheer volume of supply that's coming off exchange. So overall, I'm pretty bulled up about the actual supply dynamics that's going on. Let's just step in here. Let's just look at Coinbase, right? Here's our 20,000, 18,000 when we were contesting 18 to 20,000, right? That was the peak of Coinbase's overall BTC exchange volume. They had 1-point-something million coins at that point in time. And then the institutions have just started stair-step withdrawing this thing, right? I mean, it just falls off a cliff. If we look at this in all time, right, it is just falling off a cliff. So this is a supply dynamic we've never seen. You can see that's basically been up ever since, right? Now, if we actually zoom back into 2 years, I almost want to step through each of these exchanges because there's a few interesting dynamics going on that's worth just paying attention to. There's two classes of exchanges right now. You've got your Coinbase style pattern where it's basically falling off a cliff. They're getting a reduction over time. And you've got your Binance, right? This is Binance speculation, right? These are people punting on altcoins. So just to give you a bit of perspective, we're talking about 260 and now we're up at 360, 380. So 120,000 coins have moved into Binance. What we've got coming out, so these are coins that are very liquid. They're going to be moving around, punting altcoins, all the rest of it. Coinbase, we're talking about 1 million, and now we're down to 800,000. So 200,000 or 80,000 more coins. These are institutional accumulators, right? So these are genuine cold storage coins. So what we're actually seeing here is that far more coins are being sucked out of Coinbase than are going into Binance and various others. So in the category of exchanges that are growing their balance, Binance is one of them, which is to me is a very retail 120x leverage. Let's go long on alts. Gemini, right? Gemini, I am positing, I believe that this is going to be institutional adoption, particularly following, I mean, look where it went, right? From March, whoom, straight up. So back in March, they had a piddly 110,000 coins. They now have 250, right? So we're talking about another 140,000 coins that have moved into Gemini. We said that we had 200 coming out of Coinbase. Starting to look like very, very similar numbers. So really, when you match Coinbase and Gemini, I mean, even so, you can see even when you've got the inflows to Gemini and Binance, Coinbase is still overwhelmingly, right, capturing both of those two that are increasing. So if we turn off, oh, sorry, I should add Kraken is in there as well. Kraken's got a bit of a funny pattern. Technically speaking, over the last 12 months, Kraken is up, but it's up by like 30,000 coins. It's kind of, or even, sorry, 3,000 coins. It's kind of an irrelevant sum. Anyway, let's just take that. We've got Kraken, Binance, and Gemini, who are all in an uptrend overall in coin supply. If we just balance that with Coinbase, you can see we're still trending down of late. Yep. So the outflows from Coinbase are completely offsetting the inflows of Kraken, Gemini, and Binance, just to give some perspective on what's going on here. So let's now look at all of our exchanges that are accumulating. You can see we've got this nice little uptrend. If we now look at all of our exchanges that are withdrawing, let's ignore BitMEX, Bitstamp, Bittrex, Bitfinex. That's all the ones we want to look at, I think. They're all the major ones. You can see just a remarkable downtrend. So we're talking about 2 million coins all up between all of these, and they are currently trading down at 1,400. So that's 600,000 coins that have been sucked out of these exchanges. Overall, pretty dramatic. If we balance it with all of our, in fact, if we just turn on all of our different exchanges overall, about it. Kraken's on. Okay, so let's go back to our 2 years. I mean, you can see just even the grand scale of things, the withdrawals remain huge. If we look at it within a two-year time frame, maybe it's probably too close. 5 years, maybe it's probably better. You can see that really we peaked in March. We peaked hard in March, and it's just been a perpetual downtrend ever since. So, I mean, if I'm going to kind of summarize everything I'm seeing old hands selling less. I'm seeing new entities picking up in volume and numbers. I'm seeing balances getting sucked out of exchanges at just unbelievable rates. I'm seeing volumes of coins going from withdrawing exchanges into still liquid Binance and Kraken and Gemini's cold storage, right? So we can actually discount that even though it's going up. So we're still being very generous when we're talking about that. And Coinbase alone offsets it. We're still talking about a massive, massive downflow. So, you know, I'm not going to lie, it's very, very hard for me to be even remotely bearish at this point in time. I think just the supply dynamics on chain, I cannot argue with them, right? They're just too real at the moment. So overall, you know, again, no one knows what's going to go on the volatility in the short term, but I would actually be of the opinion that I think we're ready for a leg up, and I think the supply dynamics support it. I don't think that we are in any sense overblown right now. And I actually would not be surprised if we do not have another serious leg up and then just consolidate, right? I know I've been saying that we're at this second consolidation before the final euphoric run. I think we still have another kind of healthy leg, healthy stepping stone up before we get that, right? So overall, I think it's pretty safe to be spot long right now. I'm not seeing any trend to the converse. So exciting stuff. As always, grab me in the chat room if you've got any questions or comments. But overall, happy hunting. It's looking pretty good. Cheers.